Good morning and happy January, everyone, and welcome to Weekly Profit Talk. I'm Eric, and I do this every single Wednesday at 8:30 a.m. That is 7:30 if you're in LA, 10:30 if you're in Florida or New York. So here we are, and good morning, everyone. I hope you're staying warm. I think like 40 of the United States have had a bitter freeze in the last few days. It's just starting to kind of crawl out of that hole. So I hope everybody's staying warm, safe, happy, having a good January so far. Um, we want to talk about a specific topic this week that should be top of mind or in the very near future. And that topic is 5 questions for doctors to ask their accountant this tax season. So we've gotten through the estimated tax payment deadline, which was last Wednesday, 7 days ago. If you're having a V8 moment, like that and say, oh, I forgot to make a payment, go ahead and get it done. 7 days late is better than paying it in March or April, where the underpayment penalties will be even higher. So just FYI on that. Let's go ahead. I've actually put together, let's see. Here we go. Thank you. Beg your pardon. So we've made it through the estimated tax deadline. Congratulations, everyone. Hopefully that you hit that bullseye of within $500 of tax liability, either owing or refunding. And you're looking forward to your tax filing season. So let's talk about the kind of things you should be asking your accountant. Okay, so next slide. Number one, this is my one favorite thing about the Tax Cuts and Jobs Act, a reform back in it went into effect in 2018. I had some beefs and gripes with it, but this was a bone that Congress threw at small business people that aren't incorporated. And what this does, it adds an additional tax deduction below your standard or itemized deduction for people that are in business for themselves. There are many of us, and me, accountants, as well as you, physicians, are in what's known as this special services businesses. So this deduction actually phases out completely for the specific income levels. But if you're married filing joint, it is at a relatively comfortable $798,600. Now, what does that mean? If you're grossing about $2 million a year, and after you've taken your wage from your S corporation or however you're paying yourself, you're left with an income that's below that amount, you're going to be able to write it off, which would be 20% of that income. So let's say, for example, that you land on a number that's actually, I think 798.6 is actual final phase out. So 698 would be at the point where you get the full 20%. There's a phase out in a $100,000 window. Matter of fact, I'm confident that's the case. So for our example, let's say that you managed to net $500,000 after all overheads, including paying yourself. Well, you're going to be able to write off 20% or $100,000 of that. So the reason you want to ask your accountant about this is there's some way where I can actually ensure that I'm maximizing this deduction. I can think of a good example. I just was talking about reasonable compensation. You might want to adjust your wage during the year, for example. So it's a good thing to sit down and ask. Now, this is not just medical equipment, but actually the Section 179 code in the Internal Revenue Service's tax code is designed to allow people to write off certain more expensive purchases in the year of purchase. It's still an asset, which should be depreciated, but they've increased the limit to over $1.2 million. And what that means is if you're looking to upgrade your diagnostic equipment, this might be a very good time. You can write the entire thing off, subject to certain limitations. The big one is that you have to make more money than you're writing off. In other words, if your Section 179 expense results in a net loss in the company, then you're limited by the amount that creates a loss. So keep that in mind too. Another good reason to ask your accountant. Are there any new tax credits? There are employee retention credits available for different sizes of staff And this is something that I'm not asked about very often, but it is a very good question to keep in mind. There, in fact, might be tax credits available to you for certain specific kinds of hiring practices. Energy efficient write-offs remain in the code, and let me add to that because it's going to come up. As a matter of fact, this is part of why we're talking now. We're in a new federal administration period where the tax code could change significantly. Let me add to that that's the sort of thing that takes time. Congress has to sit down. They have to do all the things that they do to create tax code in the first place. If anything's going to happen, it will not take effect for tax year 2024, which has lapsed. So I would be incredibly surprised if anything actually did come up. So some of these things may change in the following year, and it's a good year to be wary of these potential changes in the future and make the most of your tax season this year. Student loan debt. I've been doing a little digging, and much to my pleasant surprise, there are actually certain repayment plans for medical clinicians that can assist you with actually paying down that monstrous debt that you have. That's a good question to ask as well. Number 5, save one of the better ones for last here. I've been talking about this in previous lives. There are certain specific advantages to the differing kinds of business entities that you can organize your business under. And no mistake, your practice is a business. Now, you can do professional limited liability, that sort of thing, and that's great. But if you are, in fact, paying your taxes as an attachment to your Form 1040 on Schedule C, you're losing a fortune in money. Because the plain fact of the matter is that you are paying both the employer and employee side of Social Security and Medicare on every dollar you earn. The S corporation shields you from about half of that. Significantly, and additionally, I should say, a C Corp election is something that you want to keep an eye on. That's one thing that I don't think is going to change too much. The current corporate tax rate is a flat 21%. There was some talk of actually increasing that had the other party won. But for now, for smaller corporations, actually, that might be advantageous by allowing most of your business income to be taxed as a corporation and then taking a salary from that corporation. You can actually save thousands of dollars potentially if you're in an income level where that could be efficacious for you. So you may, in fact, want to take a look at how you're doing. One of the things that's going to be a big change besides major purchases is your growth. If you are, in fact, growing your patient roster, let's say you're in your first 5 years of practice and you had a significantly better year in 2024, it's a very good time to take a look at what you're going to do for yourself in 2025. So the entity under which you practice medicine is extremely important, and it's a good time to sit down, take a look at it, and ask your accountant. Now, due to the nature of this conversation, I would be remiss if I didn't add this little plug at the end, and I don't normally do this, but the plain fact of the matter is people come to me and they say, well, we've been using a guy for X number of years, and he's been okay, but he made a really bad mistake, or I don't feel like we're getting any more information from him than he or she feels is absolutely necessary. It's quite possible that you're in that boat. And over 67% of small business people polled, not just doctors, but entrepreneurs generally, wish that their accountant was more proactive. If you, in fact, either have an accountant, but you're not completely enchanted with him or her, or you're currently on the look for one, allow me to share that if you go to this website, that's one way you can do it if you want to. And you can't click on this, of course, because this isn't a video, but it's just owingsllc.com. The Work With Me page will actually appear in the menu, so you don't have to remember this whole thing. Just owingsllc.com will get you there. But another thing, keep in mind too, that we're coming to you live, or you may be watching this in replay, and on one of three media, beg your pardon here. So of course we're on LinkedIn, but also Facebook and YouTube, and all three of those have some sort of comments or messaging function. If you ask a question in the comments of any of those three, we'll get back to you, and that'll save you having to remember a website URL as well. So with that, I hope you're getting off to a very good start. I know quite a few physicians are probably in a field of specialty that sees an uptick in patient visits due to cold and flu season, and there's a lot of things going around, certainly. So hopefully other people's misfortune may in fact be an opportunity to increase the size of your practice and actually take a look at some of these tax questions that we just talked about. And I don't like to dance on the grave of people suffering. That's not what I'm trying to do. All I'm saying is that I think of Warren Buffett's quote, and I'm going to paraphrase this badly, but whenever you see the crowd reacting to a situation, turn and head in the other direction. There are actually, for example, he actually made money during the 2008 recession when the ninja loans all caved in because he was able to see the basic trend and the fear. And the whole point behind that is that there are opportunities even in less than ideal situations. So with that, again, I hope you're having a great start to your year so far. Tax season's getting ready to fire up. If you're watching this and you happen to be one of my clients, we're going to be starting the business returns very soon. Matter of fact, I think we're going to crank a couple out this week. So with that, again, I hope you're having an amazing January so far. Have a great day and an awesome weekend. And if you have a chance, do something randomly kind for a stranger today. With that, so long, and we will talk to you soon. So long for now.